Happy Sunday, guys. It's that time of the week where I go through my watch list and I can give you some ideas and break down what I'm looking at and why. So let's start out looking at some of the currency pairs so we can see how they moved last week. So last week was quite interesting. We did start to see a nice sort of relief on a lot of these pairs. So you can see the yen closed bearish on the weekly time frame. And we are still stuck in this sort of range here, but the weekly closures are pretty convincing, actually. If we look on the dollar as well, and we look on the weekly time frame, we can see a really nice bullish candle off this 101 support on the dollar. The same with the euro. So we can see here, I was saying actually for, the past sort of couple of weeks that the euro and the pound were very, very overextended, especially the dollar actually as well. We had this huge rally to the upside and we didn't really see a pullback. We saw one pullback here like on the 1st of August, so almost, in fact, a month ago exactly, because it's now the 1st of September. And we were essentially just rallying. There was nowhere for buyers to get in. And I was saying that we do need to see some sort of movement back to the downside, whether it is just a pullback or whether it is a full correction. It's a bit early to say that yet. But again, same situation with the pound here. A nice run to the upside with, almost a 5% move with no downside at all. And now we are starting to see that downside prevail, which is nice. So moving on to the watch list, we have the Euro Australian. Now, the Euro Australian I've been watching for a while. So we did have this head and shoulders pattern up here. Don't really like to use head and shoulders. It's not something that is one of my favorite patterns. I can't even find the tool up here. Here we go. So if we draw, we've got the left shoulder, we've got the head, and then the right shoulder here. So we did have this very clear head and shoulders pattern with the neckline throughout here. This also lined up with a really nice level of support. Now we didn't manage to break this for actually quite a while. I was watching it around here, and we did just gradually move back to the upside. So I scrapped the trade idea. And since I was looking back, now we've broken through quite aggressively. Unfortunately, I missed this, but it is what it is. So now looking for some sort of pullback here to get in. So to back this trade idea up, I've got my notes here. Again, I send these out to the Elite Traders members every 1 to 2 days when there's something worth updating. And this is all information from bank reports that I aggregate and organize for them and then summarize into notes so they can easily follow economics without too much of a headache. If you want access to profitable signals with professionally written trade ideas to back these trades up and to learn real trading standards with technical analysis and geopolitical and macroeconomic education with our videos and PDF resources, live webinars, and our proprietary research documents sent directly to you, then you can join our private Discord at elitetraders.io. Anyway, back to the video. So if we look here, we've got the AUD is expected to gradually appreciate over the next few quarters with forecasts of 0.69 by the end of 2024 and 0.72 by the end of 2025. The Reserve Bank of Australia's RBA hawkish stance, lightly maintaining or steady higher rates, supports AUD strength, particularly against other G10 currencies. Rate differentials, especially with the US, are key drivers of the AUD's anticipated rise. The downside here is the China impact, so the upside for the AUD is limited by weak demand for Australian exports to China, particularly iron ore, due to sluggish indicators like China's import growth, new home sales, and credit growth. I won't read all of this because it is quite long. However, it does edge on the bullish side quite convincingly. On the euro, again, I won't read this too much. The Eurozone headline inflation is expected to decline year on year, which it did. Core inflation, that's already repeated. Services inflation remains strong, particularly due to tourism and the Paris Olympics. Now, of course, this is pretty much over now. I think we've got the Paralympics on. However, that won't be sustained for too much longer. Core goods inflation expected to ease. Energy inflation projected to fall sharply. The euro saw fresh buying interest last week. That's not really too much of an issue. The euro's appeal is declining as eurozone inflation is expected to slow, with potential headwinds if the US rate expectations rise, narrowing the euro USD spread. rate spread. The Eurozone flash PMIs of August shows mixed results, with manufacturing contracts but services showing resilience though with concerns about slowing momentum. So you can see the euro compared to the Australian dollar is almost night and day. The euro is expected to underperform, while the Australian dollar is expected to perform quite well. So having said that, this trade does look pretty strong, actually. If we do draw our fib from the high to the low, and it's on the H4, we've got the moving average cross here to signal that we are now in a downtrend, just looking for this pullback. So if we look on the daily time frame to back this up also, we've broken through this 200 moving average on the daily. So some sort of move back to the upside to retest sort of any of these levels where we come up and retest our fast moving averages, this level of support, the 200, the fib level. It looks quite good for some short positions here. Now moving on, we have pound Australian. Now this is a similar situation. We are looking for the Australian dollar strength, really, and I have been pretty bearish on the pound for quite some time. You know, any regular viewers of my channel or my content will know that I am not a fan of the pound or the British economy. So looking for a move to the upside. I mean, you know, the move that I'm looking for is quite a lot, really. So we'd need to see a move of around 300 pips, just under 300 pips, really, to get to our entry, which, you know, is quite a large move. And I don't know if we're really going to get that. It might be being too optimistic. So this is more on the sidelines. If we get the entry, if we do see this push, I'll take it. But it's not a main watch, just because I don't think our entry will get met. And if it does, it probably won't be this week. It'll be in the next sort of 2 to 3 weeks, I imagine. Now, the USD CAD is interesting. So this one is a little bit more high risk. And that's because if we were going to take the Dollar-CAD, we would have to take it and run through NFP and unemployment. Now, NFP and unemployment are huge this week because, you know, the Fed's going to be watching very, very closely for more signals towards rate cuts. So if NFP comes out poor, unemployment comes out poor, the dollar will dump as we start expecting more of a 50 basis point cut. However, obviously, if they're good, it could really positively impact the dollar and signal more towards a 25 basis point cut. So if we also go ahead and look at the seasonality of the Dollar-CAD, we can see later in September, so towards the sort of mid-September at the 19th, if we took trades all through to the 21st of December, you would have won 12 and lost 8. There's a nice historical rally here, and this is over the past 20 years of data. So the seasonality on Dollar-CAD looks quite convincing. It's just one of those trades. I'm not sure if I'm willing to take the risk of it through NFP. I might take a lower risk, so maybe 0.2 to 0.5%, and let the trade run. Now, there's a similar situation here on the Dollar-Swiss. So if we go ahead and look on here, we have another situation. So we look from the 1st, we are at this dip, up until sort of the 3rd of October, we have 13 wins and 6 losses. So this one is actually much stronger than Dollar-CAD. So this one is probably the one I will take the risk on compared to Dollar-CAD. We also have the daily candles that look a little bit stronger than the Dollar-Swiss. Now, obviously, the Swiss is a safe haven. It's quite a good asset to buy, so it's not something I'm really too interested in selling. So I would really be looking for some sort of pullback here, only a small one just to trigger an entry. So potentially a 0.5 pullback somewhere around here. Stop loss, actually, let's go to the daily. Stop loss would need to be sort of around the 0.83 level, and I take profit potentially just at this 200 moving average, sort of looking for a reversion trade, really, and then I take profit up at this previous level of resistance. And then if we do get this, we may actually go and look for a short, and that's obviously depending on what the Fed decides to do and what the next movements in the markets are. But that is also an option, is trading a long into a short and playing both sides. Next, we have the pound dollar. Now, this one actually has been signaled as a long on our notes here. So if we look at the trade ideas and look at pound dollar, Now, the way these trade ideas are generated is essentially we take all the information from the bank reports, aggregate it, and then we use that to generate some trade ideas. Now, these are just ideas, they're not signals. So if please take these with a grain of salt, do your own research as always. We can ignore the technicals, but the BOE stance of Bank of England, Bailey's cautious approach, similar to the Fed Powell, indicates that the Bank of England is maintaining higher rates relative to the US. Bailey's concerns about intrinsic inflation suggests that the Bank of England may keep rates steady or higher, supporting the GBP. Market positioning: the pound has become the largest G10 long position with significant buying interest from IMM flows. Corporates, hedge funds, and real money investors. This strong positioning underpins the currency's recent appreciation. Performance drivers: the GBP has appreciated 3.6% against the USD in 2024, bolstered by risk appetite and supportive equity markets. Additionally, the euro weakness has indirectly benefited the pound as euro pound has moved below 0.85. Potential resistance levels, we can ignore that as well because it's technical stuff. So if we look at the pound dollar, and now actually let's go and have a look at the indexes here. So if we look at the dollar index, we've had a really strong bullish reaction, and the pound has had a really strong bearish reaction. So essentially what we don't want to do is buy now, because we're trading in the wrong direction. Essentially we'd be selling a strong dollar or a rising dollar and buying a depreciating pound. So we need to try and identify a pullback here in which both of them could reverse. And the most likely place is sort of this fib level. So we could be trading throughout here. Now the sort of other option is slightly above here at the previous high. So we'll mark that up as well, because this could provide a sort of break and retest around here. In terms of targets, I'd be looking for the 0.618 extension. Stop loss sort of below this low right here. So it would be very slightly under, so there. So we'd be looking for sort of a 1 to 4 roughly. So yeah, that's kind of how it goes. If we do end up getting the higher entry around here, then we'd have a tighter stop loss and put it just below this 618 level. And this would also allow roughly a 1 to 4 ish. So yeah, pound dollar looks good. Now the pound yen, this one is actually signaling on the edge finder as bullish. So this is the first time I've seen it bullish in a very long time, have a reading of bullish, sorry. So we pull up the data here, it has flipped. Now this was bearish not too long ago, so you can see retail is mainly short. We've got COT data that's relatively flat. We've got trend reading bullish, manufacturing PMIs bullish, employment and unemployment's bullish. And as I said earlier, the pound does sound quite bullish from an economic standpoint as well. So stop loss would be below these lows. I would only execute this trade if we can have a bullish candle close through here and close above this range in the previous highs, along with this 200 moving average. So what this would do is create a sort of a swap in these moving averages. So at the moment they're quite bullish, and then we could see them start fanning out into bullish, see price come up and start moving something along these lines. So that's the plan for there. In terms of our open trades, we only really have two major ones. We've got gold that I called at the start of the start of August, I think. Oh no, midway through. So it was about the 22nd of August. I called a long on silver to the Discord. So we are still in this. However, we are seeing this sort of support level get tested again. What the plan for gold is, it wouldn't surprise me if we do see a move down on gold here as we see some profit taking come in as we've just started September. September is quite a bearish month for gold historically. So that's why our stops are at break even, just anticipating sort of the worst case in which we do see, maybe the dollar start rising or continue to rise, and we see gold's historical price action come into play. However, if we do see that come, I'd be more than happy to buy gold again. I have no issues trying to buy down here, or even down here at sort of this 23.8, this 23.8 level. So Yeah, there's a few different things on gold in terms of the management. You know, I've made a video covering gold. I think it came out on Friday, so feel free to go and watch that if you want a full breakdown on gold's drivers and what the way I'm managing it and things. But overall, targeting the 3,000 level, midpoint is 2750. And that will be a position where I start to take partials and reassess the trade. However, for now it looks okay. You know, it's still holding up, but it is showing a little bit of a decline. The EMAs are still bullish, which is a good sign. So yeah, we'll have to just pay attention to gold and keep an eye on it. If we are stopped out at break even, then head to the upside again. It is possible that we will see maybe another test of this resistance and then a pop up. If we can see a very similar thing in which we start seeing price come down here, stop us out at break even, and then start showing bullish signs, I will be happy to re-enter. You know, getting stopped at break even to re-enter isn't necessarily a bad idea, but yeah, I'm happy to run that risk at the moment. So that's it for this video. Feel free to like and subscribe. It helps the channel out a lot. If you do want to join the Discord, follow signals and get some real trading education, not the price action rubbish you see on social media, feel free to click the links in the description, and I will see you later. Thank you for watching.